Eszylfie Taylor has separated himself from the pack in the cutthroat business of finances, becoming one of America's top financial experts. His dedication and work ethic have resulted in an extensive list of awards and accolades. He joins us now with financial tips that everyone wants and should know. Welcome to the show.
Hi, thank you for having me.
I'm so excited to have you here because I have a million questions for you. But let's start with something that I think is on everyone's mind, not just mine, or at least it should be. At any age, when do you decide it is time to retire? I know we all feel like we're ready to retire starting at 20, but when do you know that you're ready to retire?
Yeah, I call retirement, it's the point at which you remove the have-tos from the equation. It's not about being 62 or 65 or 67. It's the point at which you've achieved financial security. And then you're doing things because you want to do them, not because you have to do them. And unfortunately, most people just don't know, well, what's my number, right? How much money do I actually need to have saved to retire comfortably? And I always say, if you aim at nothing, you'll hit it with amazing accuracy. So it's my job to help clients identify, well, what's that number that they can live comfortably on for the rest of their life, and then go from there.
See, I thought you were going to tell me that today could be my last show and I could just go retire, but I guess,
you, you'll
we'll have to
you'll
talk more about that.
you'll be missed. We can't have that. Can't. Sorry,
Right.
can't
Okay.
retire.
All right. Well, all right. Let's talk credit cards. In your experience, better to save your money or use it to pay off credit cards?
Yeah, there's two mindsets out there. There's a debt elimination mindset and an asset accumulation mindset. A debt elimination mindset says eliminate all debt at all costs, no matter what, right? And there's certainly worse things you can do than eliminate your debt. But I like to go one step further and look at an accumulation mindset. And an accumulation mindset asks, what is the cost of borrowing, right? And can I comfortably earn a rate of return higher on my money than the cost of borrowing? So credit card debt's one we're typically want to pay off. And I'll give you an example. If I'm buying a home and my mortgage interest rate is 4%, right? And then I can deduct that interest. It's highly likely that I'm going to beat a 4% return over the long term if I invest. So I'd carry that mortgage and invest my money. If I have a credit card debt at 20 or 25 or 30%, it's probably not likely that I'm going to beat a 30% return every year. So I'd like to knock that debt down first and then start investing more aggressively.
Many of us, like me, are in charge of our aging parents. At what point do you start taking money out to save for assisted living for your living parents? And this is a question that I know anybody who is taking care of their parents really doesn't know the answer to it until you need to know it. And then you're in a rush. So tell us something we can do to plan.
Yeah, the first piece of advice I would give people is you have to understand there's three things that work in life. There's people that work, money at work, and other people's money at work. And to the extent possible, I implore you to use other people's money. If your parents are still healthy today and they're going to need, or you anticipate them needing care down the road, I'd actually have you think about getting long-term care insurance for them, right? Take the risk of paying for your parents' care off of your shoulders and give it to the insurance company. I do that for my mom, right? My mom, bless her heart, right, used to take care of me, and that role is going to shift down the road, and I'm going to have to take care of her. So I'd rather pay a $400 or $500 a month premium and shift the $6,000 or $7,000 a month cost of care off to the insurance company than carry it myself. Now, if you say, well, unfortunately, I didn't do that, and my parents are in a position now where they need care, then again, then it's more of a challenge. But to the extent you can be proactive and plan against that, I would advise that. And if not, just brace yourself, because the cost of care, I think it's estimated in the United States to be about $8,000, a month on average, right? So it's a hefty pill to swallow. So to the extent that, then I would say definitely invest your money and try to get a rate of return on your money to slow down that drawdown of funds as you pay for your parents' care.
It makes sense. And if you're not taking care of your parents, you're probably taking care of your kids. So, kids in college, rising student loan debt. Do you recommend taking out student loans for your children or having them take them out in their name? What's the
Yeah,
bottom line?
this is tough. As a father of four girls, I get it. You want to take care of your children. I would say this though: when you're flying in an airplane, there's always an announcement that comes on over the loudspeaker, PSA announcement. And there's a drop in cabin pressure. What do they tell you to do? put your oxygen mask on first and then help the person next to you. And so, yeah, sorry, son, sorry, daughter, you're gonna have to get those loans, right? Because most Americans, as you'd pointed out initially, don't know what their retirement savings number is. They're ill-equipped to plan and be prepared for retirement. So paying $100, $200, $300,000 for your child's education can certainly put a damper on that. So your little Johnny and Barry, 18, 19 years old, they've got time to figure it out and work. And so to the extent that you can shift some of the loans and responsibility off to your children that have a 40 or 50 year, time horizon for retirement, oftentimes that's going to make more sense than you if you've got 8 to 10 years before you have to retire.
And with your 4 girls, you're gonna be needing your money for 4 weddings. So
Yes.
these are great tips. Thank you so much for joining us, Eszylfie. I think everybody's learned something today.
Thank you for having me.
All right, everybody, stay tuned. We will be right back.